So I have people ask me, like, I don't even know how I got here. It only takes a few years for you to get to owing the IRS $100,000. And I know because I speak to people like this every day. I spoke with a gentleman last week and he owes $175,000 to the IRS from being self employed. Extremely phenomenal at what he does, but he didn't go into business to do taxes. And again, stick around till number 5 and I'll share with you how to avoid being in that same situation.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey family, I am back in the podcast studio for episode 6. Today we're going to talk all about business taxes. Now, this is a topic that is near and dear to my heart because unfortunately, over the past few years, the majority of clients I work with are business owners. So today, episode 6 is going to be business taxes and 5 things every business owner needs to do to avoid a tax nightmare. So if you don't have your pen and paper yet, go ahead and grab that because you are definitely going to want to take some notes. And also today, I have my podcast producer, Jim Ray, in the studio with me.
Timalyn, how you doing?
I'm doing great, Jim. This is a topic near and dear to my heart. It really, really is. I've seen so many business owners go out of business just because they didn't know. And I've said it once, I'll say it again. I'll keep saying it until I'm gone from here. I am on a personal mission to fill the tax literacy gap one taxpayer at a time. You know, a lot of people don't understand when I say this podcast actually is so you don't become my client. I want to help you understand your taxes so that you don't end up in trouble with the IRS. You know, my primary client is a first generation business owner that owes the IRS 6 figures or more. I'm trying to help you not become that person. But if you are that person, make sure you give me a call.
Well, and that's the thing. We're both small business owners. In this area, taxation, it just scares me. There's so much. It's so complicated, and there are so many things that I don't have time to watch consistently. I'm out there trying to grow my business. I'm trying to do the sales stuff, make sure I get the forms in where I need to get forms in, go talk to clients, put out fires, and do all that fun stuff. And oh, by the way, have a life. That when it comes to the tax side of it, because it doesn't come around every day, right? And when it does, I'm like, oh my God, did I do that right? Did I forget to file that or whatever? I'm glad you're doing this because I think there are a lot of people that unfortunately try to take some shortcuts and either because they didn't know or they just failed to actually execute what they knew they should have done. And I think you're going to touch on a couple of those.
Yeah, absolutely. And you don't know what you don't know. And then we live in this DIY society. We have, I want to call them out, we have companies like TurboTax that make all people feel like they're tax people. And that's just is not the case. You know, I wouldn't still be in business if everybody could do a tax return. So we're going to hit these 5 things. Like I said, every business owner, whether you're just starting out thinking about a business, even if you are a multi-million-dollar business pulling in that much revenue, hopefully you've already done these 5 things. Because if you don't, your business model is not going to be sustainable if you don't do these things. So, like I said, family, I hope you got your pen and paper. We're going to get right to number 1. You need to know your filing obligations. So the majority of people know the 4/15 deadline. We're all pretty familiar with that. But the filing obligation that you have is different based on the type of business entity that you have. I cannot tell you, Jim, how many times I have to work on abating penalties just from failure to file. And we've talked about that before in a previous episode, so I'm not going to talk about that too much in detail here. But why pay more than you have to in taxes?
Well, and just from a strict definition standpoint, when you say abating a penalty, what does that actually do for your client?
Yeah, so thank you for asking that. When we go into abate penalties, we get them removed. So there are certain guidelines that we're looking at. One of them is reasonable cause, and not knowing is not a reasonable cause to the IRS, even though it may be to us. There's also, like I said, there's reasonable cause. They do give you a little bit of grace, so you may be eligible for first time penalty abatement. But like I said, that's probably the only I didn't know reason that you're going to get. But there are about 7 different reasons that we can get your penalties removed, whether that be failure to file or failure to pay.
Which you've talked about in previous episodes extensively.
Absolutely. Yes, very extensively. I believe it was episode 2, what happens
Sounds
when
right.
you miss the tax deadline. So, again, with those filing obligations, a lot of people we've talked about, they'll ask, do I need an LLC to start my business? From a tax standpoint, not necessarily. As soon as you make that first $400, and that's net, so after expenses, the IRS is like, knock, knock, knock. Hey, you're a business. We want this extra
Nice to
tax.
meet you.
Yeah, nice to meet you. So, with the filing obligations, if you are a single member LLC, that is a state designation. The IRS still sees you as a sole proprietor, and you are going to file a Schedule C, which shows your business income and expenses to show the profit or loss. That is going to be attached to your 1040, and that due date is typically going to be 4/15. Now, I say typically because unless you've been asleep the last 2 years, you know that we've been in a pandemic. So during 2020, the deadline was extended, and then again, or I'm sorry, for 2020, it was extended. You see, I haven't fully recovered from preparing during the pandemic. But they gave us that extension, and then there is also an extension that you can file to get an additional 6 months to get that return filed, but not to pay. So that's if you are a single member LLC sole proprietor. If you have a corporation, and a lot of people don't realize you don't have to be Walmart to be a corporation. That's just one of the big ones. We have a lot of doctors, attorneys, even accountants that have corporations, just their professional service corporations. If you have a corporation, that tax return is also due on April 15th. Now, if the 15th falls on a weekend or a holiday, it's the next business day. So, for example, here in 2021, 4/15 fell on a holiday. It was Good Friday. So, the deadline for this year was 4/18. If you have a partnership, and I want to talk about this entity type, a partnership is any 2 people or more that get together and start a business. A lot of people don't understand that when it could be their brother, it could be their cousin, their friend, and they start this business together, you aren't 2 sole proprietors working together. You are defaulted to a partnership. So what that means is now your tax return is due on 3/15, but check this out, not your personal one. You are now obligated to file what's called a 1065, it's a federal partnership return. And then at the state level, it depends on what state you're in. So that is for if you have 2 people, if you have 10 people, unless you elect to be taxed as a corporation or an S corporation, that default is the partnership, and it will be due on 3/15. And I will tell you, the root of all evil with taxes is that failure to file penalty. You want to make sure, even if you're not ready by March 15th, that you get an extension in so that you can file that in September. So the last 2 entities are the S Corp. The S Corp is going to be a hybrid of a corporation and partnership. you are going to see that the S Corp is not taxed itself at the federal level, but instead all of the profits are divided to the shareholders and then they're taxed on their individual return, which is due 415. But even though they are not taxed, if it is late, you will still get hit with those failure to file penalties. And last but not least, we often forget this entity here. When people have something that is perhaps a passion project where they want to affect the community, we do have the nonprofit entity, and that tax deadline is 5/15. So even with that, even though you may have a good heart, you want to impact the community well, if you don't get that filed on time, they actually, for that entity type, it's by the day
Wow.
that failure to file penalty starts to accumulate.
And that can be significant. I mean, as we've talked about in the past, and that's just, I'm sorry, it's just there. You should have filed in time or petition for an extension, right?
Yeah, absolutely. Especially now, we have big nonprofits and we have very profitable nonprofits, because, again, it's still a business. But at the same time, if we have a smaller company, even if you're a nonprofit, you don't want to end up getting shut down because you didn't file your return for a year or even lose that nonprofit status as well.
Yeah, there's a lot to it. And that's the thing with all of these fluctuating dates, and the majority of those were separate from your personal income tax due on April 15th. And that's, I think people kind of get mixed up in terms of, okay, this has to go in. Well, I filed that, yes, but you still have the other one to file. And sometimes if you're not paying attention to it, or you just get frustrated. And sometimes when you get frustrated, the head goes in the sand, and now you got the ostrich approach, which you have advised us many, many times is not the right approach when it comes to the IRS.
Yeah, the ostrich approach and the pray and wait,
Yeah.
they don't work too well with the IRS. But I'm going to get to it later, with the fifth thing every business owner should do. If you're already confused, take notes, because you as a business owner, you have your due diligence to be educated on certain things. But if you knew the tax law as well as me, you shouldn't be doing what you're doing. You should be doing something with the tax law. You didn't go into business or start your nonprofit to do taxes, and that's perfectly okay. But like I said, stick around till number 5, and I'll talk some more about that. So number 1 was know your filing obligations. Number 2, similar but still different, you need to know your tax payment obligations. Jim, I've met so many people that are phenomenal at what they do, but because they're no longer getting a paycheck from a company, no taxes are withheld. They're like, oh my goodness, I'm a business owner. I'm making so much more money. And then April 15th comes and they're like, why do I have a $20,000 tax bill?
Really simple.
Really simple. With you being self-employed, and this is for a single member LLC, a sole proprietor, and a partnership, you are going to face something called self-employment tax. Self-employment tax is, and I've said this before, but in case you're new to the podcast, self-employment tax is the self-employed person, so the entrepreneur, the gig worker. So even if you're driving an Uber, the IRS sees you as self-employed. It is your share of Social Security and Medicare.
This is the 1099.
Yes.
This is the 1099 independent contractor.
The independent contractor. And like I said, $400 may have seemed strange when I said it before, and that's when the IRS is like, knock, knock, knock. I've had people say, well, hey, I only made $10,000 this year in my side gig. Why do I have a tax bill? You may not have to pay income tax on that $10,000, but you still have to pay that self-employment tax. And for a lot of people that are self-employed, that's the big chunk of tax that they owe, because self-employment tax is a whopping 15.3%. And again, if you dropped your pen, I'll give you some time to pick it up so you can keep on taking notes here. But what you don't realize, Maybe you started a business and you're still working your 9 to 5, before you take the big leap. If you look at your last check stub and you look at everything that was withheld, it does not matter what you put on your W-4, they're going to withhold for Social Security and Medicare.
FICA. Yep.
Exactly. You do not have a choice. With great responsibility and privilege as a business owner, you kind of have a choice. You have a choice as to when you're going to pay it. So for the business owner, you're paying more because now you have the privilege of being the business owner and what would be like the employee.
Yeah, you're paying both sides of it.
Exactly. So when you work for somebody else, they pay 7.65% for you and you pay 7.65. Like I said, now it's ta-da, you get to pay both. Now on the flip side of that, you do get a self-employment tax deduction, but just like any other deduction, you can't take it until you pay it.
Right.
Right? So very, very quick illustration. If we have somebody who's single, let's say they netted, so after all expenses, they made $100,000. We're looking at, I don't want the tax pros coming for me. Like, yes, we're going to look at the qualified business income deduction and those things to bring it down. So maybe the taxable income is closer to $87,000. Even after that, we are still looking at almost $15,000 in self-employment tax.
It's a big item to miss or forget or say you just didn't know about. I mean, it's a painful one to miss.
Absolutely. And then at that income level, you're also looking at 22, 24% in income tax.
Right.
So when we look at that, like that is an amazingly high number. You've made an administrative assistant's salary as a tax bill. So I have people ask me like, I don't even know how I got here. It only takes a few years for you to get to owing the IRS $100,000. And I know because I speak to people like this every day. I spoke with a gentleman last week and he owes $175,000 to the IRS from being self-employed. Extremely phenomenal at what he does, but he didn't go into business to do taxes. And again, stick around till number 5 and I'll share with you how to avoid being in that same situation. So we're still on number 2. You're going to be faced with self-employment tax, but something else you need to know that you have an obligation to make estimated tax payments. In the United States, we have a pay-as-you-go tax system. When you worked for somebody else, every paycheck, they withheld taxes for you. Not just the Social Security and Medicare, but they also are going to withhold your federal and state and possibly local taxes, depending on where you live at. As a business owner, even if you have a corporation, you are required to make estimated tax payments based on your tax liability. Now, let me explain this real quick because a lot of people get tax liability and tax refund confused. A tax liability, anybody that makes over the standard deduction has a tax liability. So for 2021, if you made over $12,550, you had a tax liability. Now,
is that gross revenue or net?
That is going to be net.
Okay. After all your deductions and expenses.
If you made over the 12,000, I said 550, I think it's 12,500 this year. Look, charge my head, not my heart. But you guys get the example, all right? So if you made over that, you're going to have a tax liability. And what happens is you're getting a tax refund because you've overpaid. That is plain and simple. And I don't know about you, Jim. As a business owner and all the things that I want to invest in my business, I don't want a tax refund.
I don't want to wait for my money.
Right.
Again, my money. I don't want to wait for it.
It hits a lot different when you have to manually do those checks and write them each quarter. Like we just got done Wednesday doing quarter 2 estimated tax payments. It's never an exciting time at my house. I don't know about you, Jim. But every business owner is obligated to make that if they have a tax liability over $1,000. Let me tell you this. So the first 12,500, if you're single, you're going to have that standard deduction to wipe that out. You are going to have a federal tax liability if you just make $1,000, or I'm sorry, $10,000. But you definitely do, because that's only income tax. When we put in the self-employment tax, you're over that. So I'll have people say, do I have to make estimated tax payments? Like, no, you don't, but you're going to pay for it, because the IRS will assess you an underpayment penalty for not making those even payments throughout the year.
And that's one thing to look at. I mean, in a cash flow situation, and if things are really, really tight, I mean, there are times where you skip your quarterly payment, but you're not getting away from it. I mean, it will be there at the end of the year, and it will be assessed, and you will pay it eventually. But I mean, it's, again, if you're managing the cash flow and it's tight, that is an obligation, but you're much better off, I think, making those payments in advance when they're scheduled, just to keep ahead of it.
Yeah, and I would urge you, put asterisks by this. Your estimated tax payments that you're making quarterly are an expense of the business, just like paying the electricity, just like paying the rent. You can run, but you can't hide. One of my colleagues, she says the IRS is slow, but they're not stupid. They're going to catch you.
Yeah.
And they're going to get their money. They can issue a lien to make sure you can't do anything else, or they can issue a tax levy where they just come and clean out your business account.
Both of which you have talked about in previous episodes. And in the show notes, I will insert a link for you. So if you're interested in those two topics, you can learn more by just clicking on those links.
Absolutely. And I'll even let you in on a secret here. If you do owe the IRS right now, you can start making your estimated tax payments, and what it will do, it'll lower the amount that you have available to actually start paying the IRS. So there are different strategies and things that we can do to get the amount that you owe lower. Like I mentioned, penalty abatement. We can look at partial payment installment agreements, but bottom line, you need to get the estimated tax payments in, or you may not even be able to negotiate with the IRS to get a lower settlement. But moving along, because you guys know I'm passionate about it, we're going to hit up number 3. Now, 2 weeks ago, I spoke at the Diversity Entrepreneurship Summit. It was amazing. It was at the Speed Art Museum here in Louisville, Kentucky. And somebody asked me a question about a tax plan. So what is the purpose of a tax plan? Is that so you pay less in taxes? And I said yes and no. It depends on where you're at in life. So write this down. Number 3 is to have a tax plan. So for me as a tax professional, I would love to reduce the amount of taxes that you pay this year, but we need to project this, especially as a business owner. Your income is going to go up ideally because you're in the business to make a profit. I don't want your tax liability to be low this year and then it explodes the next year if your income's not really changing. My plan is that we can project what you're going to be paying in taxes over the next 10 to 15 years. Now, is that going to always be possible? We don't know with politics. We don't know with the inflation right now. Taxes are going to go up. We won't know the specific tax rates. But there are things that we can do to be proactive so that we're prepared so that you don't get basically hit upside the head with taxes in 5 years because you had plans for your business to triple, but no plans for the taxes in there. Or you had plans to invest in all these things, but you didn't save. Because what happens if you can't work tomorrow? Are you going to be okay? Do you know how to communicate to the IRS that you're not okay if you have back taxes? Those are the kind of things that come with your tax plan. So number 4, we want to maximize your tax deductions. And this is the part where I tell people, my primary service offering is the tax representation. I work with some of those clients with doing tax prep and tax planning, but that's not really what I do. So this is not even a plug for me. The way for you to maximize your tax deductions, the IRS has an amazing small business center, but you also want to be aware of who you are hiring to help you and consult on your financial matters. I tell people when I create tax plans, you have to have a financial advisor. We have to know how everything is working together, even an attorney at times when we switch the entity types. But in order for you to maximize your deductions, along with educating yourself and having an amazing team beside you to help with that, you need to make sure that you are being proactive and not reactive. When you work with somebody, you want somebody that works in your niche. I tell people all day, you own more than 3 properties, I'm not doing your tax return. You are in the trucking industry, I'm not doing your tax return. Because yes, I believe like I'm a fairly intelligent human being. The tax law and code is so big and ever changing. I know those aren't 2 areas that I specialize in. And you want to make sure that you work with somebody that will tell you when it's too much. You want somebody, if you were in, I'll say the trucking industry, that is going to eat, sleep, and breathe that industry to make sure that they're not missing out on anything for you when it comes to maximizing your deductions. Or when you come with questions about deductions, they're able to answer you without a hypothesis.
Right,
It's
right.
an educated response.
Right. They probably handled that same question 10 other times this month. They understand it because that's their wheelhouse.
Exactly.
It's like, if you want to go to a doctor and you're having, heart problems, you don't want to go see an orthopedic surgeon. You need a cardiologist. You need, somebody in that area, that specialty. Accounting's much like that. There are specialties within accounting.
You're absolutely right. And like I said, all tax professionals aren't built the same. I focus in representation, negotiating the debt and things like that. We have some accountants that only do financials, financial statements, cash flow, that type of thing. There's nothing wrong with that. And actually, it suits the taxpayer better when we do specialize. I think if we could have a picture of how big the tax code is to fill a building or houses, people would be like, oh my goodness, like what they are expecting one tax professional to know about the vast majority of everything is kind of unreasonable,
Right.
actually.
Right.
So we have our 5th thing. Like I said, these are all steps to help you avoid a tax nightmare. If you are in a tax nightmare right now, you definitely need to take heed to number 5. The 5th thing that every business owner needs to do to avoid a tax nightmare is to outsource your tax planning and your tax preparation.
This is my favorite piece of advice from you in this entire episode.
Well, like I said, we live in a DIY society. And I mean, I go to YouTube University. Don't get me wrong. There are definitely things that you can find out on social media, the internet, to give you a general kind of tutorial on different things. But like I said, TurboTax, all people are not tax people. There is no way in the world that a construction client of mine should be trying to do their partnership return. Yes, I believe that person is educated as well, can read the instructions, but there are going to be things in the tax law that it's a completely different language and lingo. And yeah, I'm here to fill the tax literacy gap, one taxpayer at a time, but I want you to think of it this way. Each year on the instructions, the IRS puts how many hours the average return takes to prepare. So for the Schedule C, and that's just one schedule on the 1040. So for my single member LLCs, sole proprietors, that Schedule C takes 10 to 12 hours.
Just for the one schedule.
For the schedule, and that's with, they have record keeping and things. So I want you to think about how long it takes for you to reconcile your books each month. Add that all up, and then Add that 12 hours. Now, Jim, different people work with hourly rates, but as you are listening to me right now, I want you to think about your most popular service offering and what you would make hourly. So when I just did this example, when I was going over this in this presentation, we had people saying 200 an hour, 1500 an hour. And when you do that math, if we have somebody that makes $1,500 an hour and then they spend 10 hours doing their tax return,
Just on the seed, not the rest of the
not the
rest of
rest
the
of
return,
it,
just on one section.
that's a $15,000 return. So, yes, we're in a DIY society. Yes, you need to educate yourself, but you need somebody that specializes in what you're doing, or else the opportunity cost is not worth it. Because, you know, $15,000 for a Schedule C return, that's a bit outrageous. Not for that entity type, but that's what you're doing. If you could be charging that per hour and you're doing your return instead of outsourcing that to a professional that specializes in what you do.
Well, and you got to think they're going to be more efficient at it. They're going to know context. They're going to understand the nuance behind how the rules are worded and what can be done and what can't be done. And they're not going to make as many mistakes going through it as you might going, well, I thought. It doesn't matter what you thought. This is what it says, and this is what it actually means. And there's an art to that. And having a professional such as yourself who understands this is how it's written and this is what it really means in all practicality makes a huge difference. Huge difference.
Absolutely. And again, when you are looking for somebody to outsource the tax planning to and the tax preparation, those are two different services. Preparation is after the fact. We take what's happened during the year.
Postmortem.
Right, postmortem, and we get the results of what you owe. Tax planning is a completely different service where we project what you're going to do, and then we tell your money where to go.
Right.
So again, when looking for somebody to do this and looking at credentials, a lot of people get stuck on the CPA. As Jim was saying earlier, accounting is so big. There are some CPAs that only do financials. So what you want to do as a taxpayer, you can go to the IRS website and you can go to Tax Pros. It'll give you the different credentials. You'll see the CPA, which is the Certified Public Accountant. We have tax attorneys. We have enrolled agents as myself. And then we have annual filing season preparers. These people aren't credentialed to do representation, but it's recognized by the IRS. They've taken enough continuing education and a test administered by the IRS to say that they should be okay for that year.
They've got a working knowledge.
Exactly. And right now you need somebody that has all the updates because so much has changed just from the Tax Cuts Job Act and then the pandemic. But there's a directory there free of charge for you to use to see if your preparer actually has authorization to even prepare returns. I run into that a lot with people who have paid for preparation, and when I get the return, it says self-prepared at the bottom.
Right.
Yeah, so the main thing, like I said, it's not even a plug for me because I can't help everybody. But you want to make sure that you are outsourcing your tax planning and tax preparation to help you have a sustainable business model. Because back taxes most definitely shouldn't ruin your life. They shouldn't close down your business. You want to make sure that you are proactive in doing that to take care of everything.
No, I agree. And that's, they're worth their weight in gold. They really are. I mean, the fee that you're going to pay, by the way, next year is deductible as a tax preparation expense. So it's not like you're paying the full boat, right? You're going to get some of that back, but just the expertise, the advice, and the guidance. I just sleep better at night. I sleep much better at night as a small business owner knowing, hey, somebody else has this because I can't be good at everything. I'm real good at my core business. I need help in some areas. And sometimes you got to raise your hand and say, tax law? Yeah, it's not me. It's just not me.
But yeah, like you said, and that's okay. If you are in a tax bind, it's okay. You didn't start your business to do taxes. If all of this prior to this episode was a foreign language, that's okay. But now you have this as a resource, you have your notes, you know what you need to go do to find out what your tax filing obligations are for your entity type. You know what some of your tax payment obligations are. Now you can start moving forward to create that tax plan and find out how to maximize those tax deductions. And you kind of have a little cheat sheet here for who to look for to outsource your tax planning and tax preparation.
Dylan, that's fantastic information. Again, once again, this is this is the one area as a business owner that keeps me up if I let it go. But knowing that I've got somebody who understands my business, I've worked with that person for a number of years, I feel better because it is complicated. And I really don't want to be one of your clients when it comes to the tax relief. So, I really like working with you. I don't want to have to stroke the check.
Yeah. Well, you know what, family? I thank you for tuning into this. If you found any of this information of value, would you leave me a comment? You can go to americasfavoriteea.com and there is a page to contact us. If you have a suggestion for an episode or a follow-up question, please go to that page and let me know. And we have a new episode in 2 weeks. Make sure that you know when that's coming out. Make sure that you subscribe to this on your favorite podcast platform, and also go to Facebook and like the Facebook page, America's Favorite EA, Timalyn Bowens, America's Favorite EA on Facebook. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.